It's Tuesday, February 25th, 2020. Stock market obliterated today. Dow Jones down 880 points. It did not rebound from the 1,031 point loss yesterday. CNBC this morning. Infection wipes out $1.7 trillion in U.S. stock market in 2 days. This is really starting to get very, very concerning. We look at the yields in the bond market plunging. The bond market, no doubt, is now telegraphing rate cuts are coming. And I said rate cuts, plural. We are probably going to see, from what I'm hearing right now, 3 rate cuts in 2020. It's not going to cure this problem. It's not going to fix this problem. It's going to make the problem worse. It's going to make the economy worse. Remember, the problem isn't this infection. The biggest problem we have is the massive debt we've now compiled up here in America and the overvalued fake markets. That's where the real problems are. I want to share this with you today. I went to lunch to pick up some food. And what was interesting was people in front of me could not pay for their food because the system was down. I bring this up because, as most of you know, people's Fidelity accounts yesterday, people were locked out. They could not get to their accounts. Markets are melting down and people could not access their accounts to see what was going on. So I'm just picking up lunch today and they could not process orders if you had a debit card or a credit card. The only way you were getting food today is if you had cash in hand. So it's another reminder of how fragile the system really is and how dependent we are on plastic cards. We're dependent on a computer, and we're dependent on this electronic money that if it doesn't appear on a screen, we're in big trouble. Luckily, I had cash today and I was able to buy my lunch and I was able to eat. Another story I want to tell you is I was talking to a friend of mine today, and this is a gentleman who asked me months ago if he should buy a second home. And I said, absolutely not. He did not listen to me, of course, and he bought the second home. He told me, look, the stock market's booming. I don't know what I'm talking about. There's nothing to worry about. This thing, is going to continue to surge. Well, today I talked to him. I said, have you seen what's going on in the markets? He goes, oh, it's just because of this infection. It's no big deal. It's absolutely amazing how people are ignoring the dangers. They're ignoring the warnings. It's just an infection. It's no big deal. They don't see the problem here that we have massive debt. We have an overvalued stock market, overvalued assets. Nothing is real. And now we're mixing in this whole situation coming out of China and nobody's even concerned. It just really amazes me how lackadaisical people are with what is happening in the world today, that they're immune to collapses. They're immune to financial collapse, dollar collapses. They're immune from infections. They're immune from a housing bubble. It just really shocks me when people just act so nonchalant, like this is just all going to go away. One thing that a lot of people aren't talking about today, and that a lot of people didn't talk about yesterday, was the repo market. Yesterday, they pumped in $40 billion. $40 billion, and we were down 1,031 on the Dow. Today, they nearly doubled that with $75 billion. And we were down nearly 900 points today. So is the medicine beginning to wear off? Look, the Fed has 2 tricks. Lower rates, which they're going to do, and pump massive amounts of money into these markets. And the medicine is at some point going to wear off. They pumped $75 billion into these markets this morning. And look what we got. We got a Dow Jones negative 880 points. Bond market 10-year at 1.32 today. Numbers subject to change. I wrote this down this morning, so I'm sure they've changed at this point. But this morning when I was watching Fox Business, I saw the 10-year at 1.32, the 30-year at 1.78. Look, these are record lows. This is a bellwether. This is the canary in the coal mine telling you, warning, warning. Look, I have a handful of people that I know personally now that have gotten out of these markets 100%. Cashed out money markets, IRAs, they are out. And I'm not a financial advisor. I'm not telling anybody what to do, but a lot of people now are getting out of these markets. But unfortunately, a majority of people are going to hang into this. Look, we could rebound tomorrow. They could pump a massive amount of money in here. They're going to cut rates. They're going to do everything humanly possible to keep this alive. But sooner or later, they are going to lose control. The medicine is not going to work. 3/4 of corporations have tier 2 suppliers in China. Do you think this is not going to have economic repercussions in America? They are now talking about Christmas and how Christmas could be disrupted. Yeah, no doubt. We're seeing shortages in auto parts, phones, paper, medicine, you name it, everything. We are going to see, so now that these supply chains are breaking, these factories are closing down, we are going to see, I think we're going to really see the ramifications here in the next 2 to 3 weeks as Apple now is having problems. What happens when the semiconductors don't arrive, the chips don't arrive, the phones don't arrive? Is this going to I mean, look, they can paper over this market all they want, but they can't paper over supply chains breaking, factories closing, this whole thing breaking loose now in Italy, in Iran, in Israel, all over the world, South Korea. And the question we have to ask ourselves, is it much worse than they are telling us? More than likely, it is much worse. You know, I looked at casino stocks today, absolutely hammered. Airline stocks, hammered. Chip makers, hammered. Yet the president says, buy the effing dip. That's what he said yesterday. But unfortunately, today, the market was down almost another 900 points. Larry Kudlow came out. He says everything's good. No supply disruption as of yet. You know, this is when you really need to begin to worry, when they're telling you everything is okay. You know, when the president used to come out and you know, cheerlead for the market during the phase 1 negotiation, it was working. But it doesn't seem to be working like it used to. With the president coming out, with Larry Kudlow coming out, it just doesn't seem to have the same effect. Steve Mnuchin came out trying to calm the markets down today. It did not seem to work. So are they losing control? As the CDC comes out and says, get ready, it's not a matter of if, but a matter of when it gets here. So, you know, believe what you want to believe, but I'm reading between the lines here, and I'm personally going to be ordering more dry food. That's one thing I will be doing tomorrow. I did order some more precious metals today. I ordered from SD Bullion. People ask me all the time. I've been getting a lot of people writing me and asking me a good place to purchase metals. And as you know, I order from SD Bullion. I have a link down below. So if you're looking to buy gold or silver, I highly recommend SD Bullion. Now, I don't care where you buy your gold or silver from. I don't care if you buy it at the pawn shop, the jewelry shop, a coin shop, or some company online. As long as it's reputable, I believe you need to be acquiring as much precious metal as possible. And so I made an order today, and I will be making a food order tomorrow. You know, I have a pretty decent amount of food, but I think it's a good time just to kind of bump it up a little bit. When I read articles like this, there's no doubt I'm going to continue to buy metals until I no longer can. I'm going to continue to prepare. Zero hedge today. Richmond Fed business survey crashes in February as new orders collapse. Shipments fell to 1 after 29 in the prior month. New order volumes fell. Order backlogs fell. Inventory levels of finished goods fell. Inventory of raw goods fell. And it's only going to get worse. You know, there's a lot of people that'll make fun of me, judge me, mock me, tell me that I have no idea what I'm talking about, and that's fine. But I absolutely care 100% about this country. I care 100% about everybody in this country, whether you're black, white, brown, yellow, it doesn't matter. I care about the people in my country. I care about every one of you. And it's imperative, if you're watching this video, that you are preparing the best that you can. And for many people out there, many people, it's too late. There's not going to be enough time to prepare because I believe this is getting much closer than any of us anticipated. Subprime credit delinquency spike to record high, surpass financial crisis peak. This is a danger for most Americans. As I've said earlier, debt is the enemy of America. It is the danger to you and I. If these people are broke right now, what are they going to do when this economy officially turns? When this thing implodes, what are these people going to do? If they're drowning in debt right now, they're absolutely 100% unprepared for what is coming. And when this thing comes down, these people are going to be absolutely decimated. And remember, unemployment, as this thing continues to unfold, we're going to see unemployment numbers ticking up. And people are going to get themselves into very, very big trouble because they have so much debt, working paycheck to paycheck. 47% of this country doesn't have $400 saved up. What happens when a family member, a husband or a wife, loses a job? What are they going to do? Okay? These are the things we need to be thinking about right now. I'm over here as we're running some errands. We stopped off at a golf course here, and people are out here having a good time. They're drinking, they're playing golf, they're eating, they're laughing. You would not even think that the market has been slammed for almost 2,000 points as people here are running up their credit cards, having a good old time, just enjoying the party, enjoying the little bubbles that they're in. These people over here, they have a nightmare coming and they have no idea. These are going to be the people taken by surprise. President to investors, buy the effing dip. This is what he said yesterday. This scares me a little bit because this president is putting the markets in front of the safety of America. This used to work during the phase one deal. It's not working like it used to. Again, get ready to see rate cuts, get ready to see massive liquidity injections into these markets. Airline stocks getting pummeled today. United Airlines abandons full year guidance due to virus uncertainty. Disruption escalates. Procter & Gamble says over 17,000 products potentially impacted by the infection. Yet people are playing golf, drinking their wine, having a martini, not a care in the world. Markets lost $1.7 trillion in the last 48 hours. Nothing to worry about, folks. CNBC, Expedia cutting 3,000 jobs following disappointing year. It's just begun. It's about to get much, much worse for the travel industry. That's on CNBC. Wolfstreet.com last night, stocks plunge, traders confused. I'm going to kind of go through this article. I'm going to paraphrase through a little bit. There's a few things I've added to it. It's very, very good. Complacency. Let's talk about complacency. Many of the people out here are very complacent as they continue to just live in their little bubbles, believing they're immune from infections, immune from global collapses, immune from dollar collapses, stock market collapses. Life is good, my friends. Complacency is dangerous. Just brushing things off as though they don't exist because they don't fit into your bubble. People are going to find out one day that they're not immune from the dangers like these infections, like these stock market collapses, like global collapses, like currency collapses, like food shortages. They're going to find out that they're not immune from these dangers. Or this hyper-inflated stock market that is going to blow up at some point. Maybe not today, maybe not tomorrow, maybe not next week. But this thing is on borrowed time. It's not a matter of if, it is a matter of when it does. And this is why you need to have all your ducks in a row. This is why you need to be prepared for what is coming. Because it's not a matter of if anymore. Everybody knows that these markets are going to blow up. Everybody knows that these are the biggest bubbles in the history of the world. And they're not going to go away. They're going to get bigger. And at some point, they are going to burst. People brush off danger. It's irrelevant as long as stocks go up and their 401k is growing. I mean, it's almost silly how these people act today. Oh, my 401k is doing great, so there's nothing to worry about. No matter what's happening in the world, if Deutsche Bank blows up, no worries, my 401k is fine. They don't understand that everything is interconnected, that when things start blowing up, when bubbles start blowing up around the world, it's going to affect these people greatly. It's going to blow up their 401k. It's going to affect our stock market. We're seeing right now with what is happening in China, the effects that it's having right here now in our stock market. And we're starting to see fear. Nothing matters like the freight recession that spread across 2019. And it's still getting worse, with shipments plunging at the fastest rate since 2009. And a buddy of mine just sent me an article with Class 8 heavy-duty trucks, your semi-trucks. Inventory is now, I believe, at the second highest it has ever been in history. The second highest inventory in Class 8 trucks. Now, you think if this was a booming economy, if you think this economy was healthy, why would Class 8 truck inventory be at near all-time highs? Second highest amount of inventory in all time. Why do you think freight shipment is plunging to a rate that we have not seen since 2009? Railroads are laying people off massively. 400,000 rail cars sit idle in storage because the economy is doing so well. But it doesn't matter. Your 401k is doing great, right? Auto industry has been hammered. U.S. sales volume has been declining since 2016. But hey, your 401k is doing great. California new vehicle registrations have dropped 5.5% in 2019. They're down 9.5% since 2016. New vehicle sales in the U.S. have fallen for the third year in a row, now below 2000 levels. Now we are going to see this economy absolutely get obliterated. They are going to we are going to see massive amounts of money pumped into these markets. This Fed is in a corner. Get ready for big rate cuts. Remember, they only have 1.5 to 1.75% to cut. They're running out of ammo. Subprime auto loan delinquencies have exploded. Subprime credit delinquency rates have spiked to an all-time high. But yet, your friends are telling you how great the economy is doing. U.S. shale and gas sector has been getting crushed. Manufacturing output, what's left of manufacturing, has been declining for most of last year and this year. Service sector getting hammered. Retail stores getting wiped out. Restaurant chains now getting into big trouble. They've taken on so much debt. The economy's slowing down. They can't pay the debt back. Big trouble coming in the restaurant sector. JCPenney stock today, 69 cents. Now, add shortages. Semiconductors, shortages of semiconductors, chips, electronics, phones, auto parts, all that cheap garbage you get at Walmart. Imagine now when it doesn't get here, what it's going to do to Christmas, what it's going to do to retail, what it's going to do to Walmart, what it's going to do to America. Add all this up with a consumer who is broke, living paycheck to paycheck. Most people today are in bad physical shape, let alone how bad economically they are, okay? So the average American, the average consumer is in horrible economic shape and they're in horrible physical shape. It's a bad combination going into an economic collapse. Many don't know even how to change a tire. Most people are dependent on fast food just to eat because they don't know how to cook. They can barely operate a microwave. They're dependent on pharmaceuticals. They're dependent on the government for money, EBT, SNAP. What are these people going to do when the government has a crisis? What if this government runs out of money? What if the checks stop? What if the food stops getting delivered to the store? What if the truckers, if we have an emergency here with this infection and truckers aren't willing to work, what are you going to do for food? What are you going to do? What are you going to do if those government checks don't arrive? This is why we as a people shouldn't be dependent on China, and why you and I shouldn't be dependent on the government. We shouldn't be dependent on government institutions. We shouldn't be dependent on banks. We need to be dependent on us. You need to be a self-sufficient human being. You need to be your own central bank. You need to be financially and physically dependent on yourself. The less dependent you are on these institutions or these entities, the better off you're going to be. Ladies and gentlemen, you ain't seen nothing yet. These people have no idea what's coming. I'm not saying this is coming tomorrow or next week. Nobody knows the day or the time, but it is coming. You're going to see losses that dwarf the kind of losses you've seen the last couple days. We're going to come to a point where they're not going to be able to stop the losses. It's going to be 1,000, 2,000 points a day consistently. As I said earlier, it's already too late for most people. And for those people out there who were naive, who were in denial, who believed that their bubbles couldn't be popped, I hope you enjoyed the party. We all enjoyed your pics on Facebook when you were drinking the champagne. We enjoyed the pics of you going to fancy restaurants and eating steak dinners. We enjoyed the pics of your fancy new homes and your fancy new car leases. We enjoyed all the pics of you acquiring debt. But now reality is coming to America. Reality is going to come to the stock market. And things here in America and the world are about to get real. God bless.